Hello there YouTube, welcome to my channel. This is the Frugal Investor. In this video, I am going to give you guys an update on my $100,000 portfolio and how I am able to achieve it. With that said, let's get right into it. I have been investing for over 4 years now. It has been my long-term goal to reach this milestone of $100,000 invested in the market. It has not been easy, and I have worked really hard to achieve this goal. My secret to reaching this milestone has been two things. It has been house hacking, which is one of the main expenses that I had in my life, which I was able to bring down and even completely finish it by house hacking, by doing Airbnb, by renting out the separate rooms. And the second hack is by being frugal and saving 70 to 80% of my income. Those are the 2 points that have helped me a lot in achieving this milestone and being able to reach this goal of having this much money invested in the market. I have also worked on increasing my income from month to month and year to year. I'm lucky to have a job in sales where there is no cap on my income. The harder I work, the more I make. That is also another thing that has helped me a lot in achieving this goal. And I think anyone out there can achieve this goal as long as they work hard, they save most of their money, they reduce the main expenses by being creative, by finding out ways. For me, it has been house hacking, through which I have been able to reduce my biggest expense, which is mortgage. So by being creative and finding out ways to save more money, to reduce your expenses, also by keeping a check on where you spend the most money, where your money is going, keeping a check on every penny that comes in and goes out, running your household like a business. These are some things that can help you save more money, be more frugal, and achieve your financial goals if financial independence is one of your goals. Moving on to my portfolio. The current value of my portfolio is $101,260.28. So far in the past 2 months, my portfolio is up by almost 8%. I have my portfolio divided among 64 companies, which I have categorized in 9 different sectors uh, based on the industries that these companies operate in. The biggest sector by far that I am invested in right now is the tech sector. The tech sector, I own about 26 companies. The biggest holding that has produced me the most gains in the past 3 months of me being invested in M1 Finance is Tesla, followed by Apple, which is also one of my favorite companies, followed by Adobe, Microsoft, Broadcom, Etsy, PayPal. Okay, PayPal and some other companies in this tech sector are fintech companies and finance companies, but I have them in the tech sector because that makes it easier for me to have my most favorite companies under one place, the fastest growing and my most favorite. Everything else in my portfolio is slow growing and high dividend payer. In the tech sector, I only have the high growing and no or less dividend paying companies. So PayPal, Shopify, MasterCard, Amazon, Salesforce, Intuit, which runs TurboTax, Mint, Credit Karma, Square, again a fintech company, Discover Financials, again a finance company, Advanced Micro Devices, Visa, Paychex, financial company, Booz Allen Hamilton, local company here in Virginia. This is a federal contractor. MongoDB, CrowdStrike, Okta, Team, ServiceNow, Twilio, Neo, which is a EV. I own a couple of stocks of Neo and I have seen a good growth just in the past 1 month alone. Splunk. So Splunk, Team, Okta, MongoDB, and Twilio. These are all speculative plays. The companies, they are not making a profit yet. If you look at their balance sheet, the company have not been making a profit. Everything that they make, they have been putting it back into the business or they have a lot of debt. So these companies, they are not making any profits. These are really new, brand new baby companies. But I have strong hopes in the future for these companies, and I think these companies will grow a lot in the coming future because they have very solid products. And that's the reason I hold them in my portfolio. So Twilio, Splunk, ServiceNow, Atlassian, Team, Okta, MongoDB. These companies, I have huge hopes in the future. Even CrowdStrike. CrowdStrike is growing very, very fast. All these companies have strong hopes in the future, and that's why I hold them in my portfolio. But the companies are not profitable yet. So if you are a person who is looking for companies that are making profits, that are, being profitable, that have strong leadership and all that, these companies are still very, very new. They're all speculative plays, in my opinion. Other companies in this portfolio are solid companies, making profits, growing in size, great products, great leadership, and these are all my long-term holds. Moving on to the second sector in my portfolio. This is the consumer sector. This is my dividend paying sector. This sector produces the most dividend in my portfolio. My biggest holding in this sector and my favorite holding in this sector is Home Depot and Lowe's. Home Depot pays out a great dividend. It has no competition, literally, from tech sector like Amazon. Amazon cannot beat Home Depot. They're in completely different spaces of their own. Followed by Lowe's. Lowe's is also a great company and has been growing really, really fast. Pays out a great dividend as well. Target also has a niche of its own and a customer of its own, I think, which cannot be taken out by Amazon. Pays out a great dividend and also has seen good amount of growth. McDonald's, during the pandemic, McDonald's was able to show how strong it actually is, how strong the customer base actually is, and how much the people love McDonald's. There were lines in the McDonald's drive-through, and that shows that McDonald's has a strong customer base, and it is hard for this company to go out of business at least within the next 30 years. Also, my long-term hold pays out a great dividend. Walmart, Sherwin-Williams, which is a paint company, Costco, Evergreen company, pays out great dividend. Very solid company. Waste Management, one of my highest dividend payers in this sector, and one of my favorite companies as well. Starbucks, Coca-Cola, Disney, PepsiCo, Netflix. Netflix is the only company that doesn't pay out a dividend, but I don't hold much of it. I just own one stock, and I have huge hopes for Netflix, and I think it'll keep growing in the coming future. So most favorite companies in this portfolio personally are Disney, Waste Management, followed by Home Depot and Lowe's. Disney, because the company is now diverging into the sector which is Disney Plus streaming sector, and also they have parks which are going to be open soon after the pandemic. So the streaming sector has been really good to Disney, and the show Mandalorian, it has 2 seasons and both the seasons are fantastic. I love the show. I've watched it myself and I love it. It's really great. And that's what makes me a strong believer in Disney. If they keep producing out good content, the company will keep growing in the streaming sector. And also their parks are, as soon as the pandemic is over, their parks will open back up, and that will be a huge stream of revenue for them as well. Followed by Waste Management, because their dividend, they have been paying dividend for I think more than 40 years now. And they pay out a great dividend, and the company also has a very solid and stable business model. Followed by Home Depot and Lowe's. I think they're in a niche of their own, and any tech company cannot beat them. Also, they have their own apps and they have their own space in the tech sector as well. So that's what makes me really, really positive on these two companies for the long term, which is Home Depot. Moving on to the next sector in my portfolio, which is real estate. In real estate, the biggest holding I have so far is Blackstone Group. Now, Blackstone Group is not a REIT. It is a hedge fund and an investment company, but they are also spread out in the real estate sector. And they have some really good, solid buildings and properties. Blackstone Group is my biggest holding. So far, it has seen a huge growth, and they pay out one of the greatest dividends in my portfolio, followed by Digital Realty Trust, which is a data center, followed by Realty Income Corp, which pays out dividends monthly, great dividend payer. Boston Properties, great dividend payer. Store Capital, which owns a lot of properties close to where I live, and they are also great dividend payer. QTS Realty Trust, which is a data center REIT, and they're a fast growing company, and that's why I have them in my portfolio. Data center REITs, DLR and QTS, they are my long-term holds because I think they have a huge growth ahead of them. Moving on to the next sector in my portfolio, it is financials. Financials have seen a huge growth in the past month after the stress testing by the Fed, where the Feds check if the banks are strong enough to hold any financial shock during the pandemic, or if anything happens like recession or anything, can the financials and the banks hold up? Because they're literally the backbone of the economy. JP Morgan and Chase is my biggest holding in my entire portfolio. And this is one of my long-term holdings. I love JP Morgan and Chase. And they pay out a great dividend. The company is really great. The leadership is really great. Jamie Dimon is a great CEO. Even the employees at the branch level speak great of him. So JP Morgan and Chase, absolutely fabulous company. Followed by Sandy Spring Bank, which is a small community bank in DMV, and they have been growing really fast. Also, the financials are really great for the company, and they pay out a great dividend. The leadership is good as well. Capital One, I have worked for Capital One in the past. They pay out good dividends. I think 1% or somewhere like that, which is not great, but it's okay. Also, they are the forefront of digital banking. They are the bank that want everything digital. They want to take out the branch factor from banking and move everything to digital platforms. So they are the leaders in that, and they are taking it to the next level. And that's why I have a strong belief that Capital One will continue to do better. Um, it's one of the most adapted banks among the younger generation, and it will continue to do better in the coming years. Bank of America, Warren Buffett owns it. I bought it at the dip, and the company has been growing, and they pay out a great dividend. So this is also one of my long-term holds. Next sector in my portfolio is ETFs. ETFs, the biggest ETF that I hold is VYM, which is Vanguard High Dividend Yield ETF. Pays out a great dividend, um, and also has seen a good amount of growth in the past 2 months, followed by SCHD, Schwab US Dividend Equity, followed by SPHD and VOO. SPHD is the highest dividend payer among the bunch. Um, Also, it has seen a good amount of growth in the past 2 months. SPHD holds 50 companies in its portfolio, and all of them are great dividend payers. So these are also my longest term holdings, as long as I can hold them basically. The next sector in my portfolio is healthcare. Healthcare, I have companies like Johnson and Johnson, which is like the index fund of healthcare industry. I mean, if we look around our house, almost everybody can find something from that belongs to Johnson and Johnson. So this is also one of my long-term holds, pays out good dividends, doesn't grow as fast, but the company is really, really solid. AbbVie, also one of great companies, great dividend payers. Becton Dickinson and Company, and dividend payer, good company. Anthem, insurance provider, just to diversify my health sector. I'm not a big fan of Anthem and Pfizer, but still have them just to diversify my health sector. Pfizer I bought before the pandemic, before they announced that Pfizer will be making the drug for this virus, and they also increased their dividend recently. So it's a dividend play, and that's the main reason I have it here. It's not a growth play. And Anthem, I'll be selling it off in the coming future, not anytime soon, but in the coming future I will be selling it off. It's also a dividend play right now. Moving on to industries. Industries, all I have in here are railway companies. Union Pacific pays out a great dividend. Also, the company has been growing steadily over the past 2-3 years. Canadian Pacific, same thing, great dividend. Companies grows steadily. Norfolk Southern, which is a local company based out in Virginia, grows steadily and pays out good dividend. So these are all my long-term plays, and I will be holding them for the long term and reaping the sweet dividend, as well as the growth that comes from these companies. The next sector in my portfolio is utilities. Utilities, I own energy company, electrical companies. My biggest holding and my second biggest holding in my portfolio and biggest holding in this sector is NextEra Energy. NextEra Energy is the biggest producer of solar and wind energy. Under this current administration of Joe Biden, they have a clean energy initiative, and NextEra Energy is the company that is going to reap that benefit, as it is one of the largest producers of wind and solar energy here in USA. They are going to reap the benefit of the government introducing environment-friendly energy tactics and bills and initiatives, and this is the first company that is going to gain a lot just after winning this presidency. Just after the declaration of results of this election, the company has jumped by almost 6%. This is also one of my long-term holdings, because I think clean energy is going to be a major um, goal of future administrations and the people in the coming years, and this company is going to benefit a lot from that. Moving on to my next sector in this portfolio, it's telecom. Telecom, it's not a huge growing sector, it's not a growth sector, it's a dividend paying sector. Biggest holding is Verizon, followed by AT&T. Verizon has not been growing a lot. AT&T has not been growing a lot either, but they pay out great dividends. Verizon is also one of the highest dividend paying companies in this portfolio. AT&T also pays out a really great dividend. AT&T just launched their streaming service HBO Max. They made all the content free, so I have hopes with that. And if it works out, I think AT&T is a great buy at this price. And if it doesn't work out, then I will be getting rid of AT&T in the coming future. These are also my long-term holds, 5 to 6 years, and it will depend on how these companies deal with the future problems that they're facing and the future issues that they're facing, and if I sell them or not. So that is a brief overview of my portfolio and the holdings I hold. Currently, I hold about 64 companies in my portfolio. Currently, I hold about 65 companies in my portfolio. The dividend yield is close to 2%. The growth in the next 5 years, if I invest $100 today, in the next 5 years, it will be $213.74. In the next 1 year, it will be $157.50. So 5 years growth is 113%, and 1 year growth is 57%. It is broken out among these 9 sectors: technology, consumer, financials, real estate, healthcare, ETFs, industries, utilities, and telecom. So that's why I call it the growth dividend sector, because it is growing. Growth is the main reason that I invest in these companies, followed by dividend. I'm not a dividend hungry investor. Dividend is also in my mind and is also on my list, but first is growth. I need growth and then dividend at this point in my life. So that was my pie. Those are my companies. If you like this type of content, please let me know in the comments down below. Thank you for watching, and see you in the next one.